Welcome to another S&P 500 analysis. Today is September 4th, 2021. I guess the market is just keep on grinding up. And the question is there a storm coming in the market? Because right now, a lot of people out there is basically cautiously waiting for the market to pull back or even into a major correction. In this video, we're going to take a look at the price action and also show you something that might not be too surprising if you have been following me for a while. So stay tuned. Now let's start off with looking at this weekly chart of the S&P 500 and just review some of the stats on a weekly basis here. Last week, we saw the S&P 500 continue to contract in terms of range. The size of that, the weekly range have been quite small in the recent weeks. And last week was no different. The range was just a little bit over 32 points, and it gained 26 points or 0.58%. And as you can see, it is still budging up against this upper trend line here. And it is also inside of this narrowing wedge here. So we're bound to see some price action, either going to break out of this wedge on the downside or on the upside. So it's just a matter of time. We're going to see something dramatically take place in the S&P 500. But how and when, no one knows. Right? All we know is that it looks like it is getting ready to do something. And as you know, a lot of people was talking about, August is one of the worst months, and now they're talking about September. Well, all those nice and fine for a statistical point of view, another word for probability point of view, but it doesn't necessarily guarantee that is what is going to happen, right? Same here when we look at these technical price action, it doesn't guarantee that the price is going to go one direction or another. We're just looking at these price action using technical analysis to get a sense of probability of what most likely will happen. Likely doesn't mean it will, right? It's just that it could. So bear that in mind. Now let's continue on and looking at this price action. We see the low is higher than the previous week low, so that defined as one time framing up, and we are still continue to see this weekly price action one time framing up. In other words, it's still moving up in an upward movement direction. And also the price is above this ascending 10-week moving average and also this 40-week moving average. Also sort of have a little bit of a price channel here, just a little bit of a different perspective as well. We could also say once you break this wedge, we might be looking at it to retrace back down to this price channel. But that is something to talk about in the future when that is more likely to happen. Right now, we're basically looking at this price action here for a potential breakout or a breakdown from this wedge. So overall, the weekly price trend is still up. No matter what we say, how extended this market is, the price action still saying it is up. Now, before we take a look at the market sentiment and the internal, I just want to show this chart here on all these major market indexes that we follow here, and just to highlight some of the key point here. If you notice that the New York Stock Exchange Composite, that index is a broad market index. It is a index of the 3,000 plus stock that traded every day in the New York Stock Exchange. Okay, and that index kind of indicate to us, what is the real strength behind the market, rather than just looking at the S&P 500, which is only 500 stock, and the Dow Jones Industrial, the Dow 30 is only 30, and the Nasdaq 100 is more biased toward the tech sector. So in the New York Stock Exchange index, the composite index is a broad market index because it covers all the different sector and all the stock traded in the New York Stock Exchange. So when we see a new high that was made by the New York Stock Exchange Composite last Thursday, there is some significance there. The significance is that the market participation is not narrowing because If it is, then the New York Stock Exchange composite would not be making new high. So that is interesting to bear that in mind. Although with that index making new high on Thursday, we did not see the Dow Jones Transportation or the Dow Jones Industrial and the Russell 2000. What we did see is the S&P 500, the NASDAQ 100, and the NASDAQ Composite. And on Friday, the NASDAQ 100 and also the NASDAQ Composite closed with a new closing high. On Friday, the NASDAQ 100 and the NASDAQ Composite closed with another new all-time closing high. Now let's go and take a look at the sentiment and also the market internal before we take a little bit more detailed look at the individual indexes price action. And looking at this daily chart here on the S&P 500, as you can see that on Friday it closed down about 1.5 points or so, or 0.03%. And the VIX is sitting at 16.41. So definitely the market participants are not, fearful at all. They are very complacent right now. And also the put call ratio is sitting at 0.57. So definitely it is risk on. Now we did see a little bit of a negative internal on Friday as the market pulled back just a tad. The up-down volume ratio was minus 1.6. So that's in favor of the down volume and the advanced decline, with the decliner leading the advancer by 597 in the New York Stock Exchange. We did see 194 new 52-week high in the NYSE versus 23 52-week low. So the 52-week high outnumbered the 52-week low by 171. Looking at the New York Stock Exchange cumulative AD line, as you can see, it did come up from its low, although it's still a little bit under this peak here, but it is making progress, and maybe we could see this slight negative divergence get resolved in the coming week. So as you can see, the S&P 500 continue to close at new closing high, and the New York Stock Exchange AD line is still slightly under its high. So we'll see. Maybe in the coming week, the advancing issue will overtake the declining issue and move this advanced decline line up to a new high. And for the NASDAQ 100 on Friday closed up a little bit under 50 points or 0.31%. But we are seeing a little bit of a negative divergence here. The up-down volume was favoring the down volume by 1.16. The advancing issue was trailing the declining issue by 689. So there's that negative divergence on the AD. The NASDAQ new 52-week high did hold up comparing to the recent past. 184 new 52-week high versus 46 new 52-week low. So the new 52-week high outnumbered the 52-week low by 138. Now, the NASDAQ AD line, it also came up quite a bit as well in the recent week, but it still have this major negative divergence because you see this, this peak here. The NASDAQ 100 was way down at this level here, somewhere around 14,500 area. Right now, it is up at 15,600 plus, and the AD line is down here at this level. So there's quite a distance for the AD line in the NASDAQ market to make up in order to resolve this negative divergence. So overall, the sentiment, the market participants are still relatively complacent and putting on risk. Now, in terms of internal, we did see some improvement in the AD line, especially in the New York Stock Exchange. So we could see that negative divergence get resolved if the improvement continue in the NYSE. Although the NASDAQ made some improvement on the AD line, but that massive negative divergence is going to take some effort to resolve. Now let's take a look at the daily price action of the indexes, starting with the S&P 500 on this daily chart here. As you can see, we were looking for this thing to come up coming up to this 127 and this 200 extension. This 200 extension is essentially this range extension, this major move, 2x of that. So you can see that it pretty much hit that level there on Thursday on the high. And right now we are essentially looking for this particular Fibonacci retracement and monitoring these extension as a potential target. So for the upside target, we continue to monitor this 4550 on the S&P and possibly get up to this 4600, and that would come up to tag this 141 extension, this 4582 level. Now what I'm going to do is I'm going to take off this extension here on this range extension because I don't believe that is in play anymore, because right now we're basically monitoring this particular Fibonacci retracement and these extension level here for potential target. Now for the downside, once again, we're essentially looking for this thing pull back to this 100 level here, which will be somewhere around this 4480 area, and possibly get back down to this consolidation, or you could call that basically a balance area here that it broke out of. Okay, so basically that's what we want to keep an eye on, and that would also in confluence with this trend line here on this wedge, this lower trend line. And looking at this daily chart of the Nasdaq 100, you can see that it is budging against this trend line here, essentially this channel that I have drawn in. Okay, so right now we see will it be able to break out or just continue to grind up and work itself up to near this 16,000 level, which is this 200 extension, 15,950, based on this particular swing on the Fibonacci retracement. So we're going to keep an eye on this upside here on this trend line and toward this 200% extension. And for any sort of pullback, we're essentially looking for these level down here, this 161, 141 area. So, 14,850, 15,233. Because there is also a little gap here that need to get filled. And there is also another gap here that is waiting to get filled. Now, the Russell 2000 is quite interesting. Remember, we've been watching this 2297. We say if we get up to that 2297, we'll be looking for it to break out of this consolidation or this balance area and possibly make its move toward the all-time closing high and possibly put in a new closing high. So if it does that, that will be very interesting for the market, because now we're talking about the small cap is coming back to life, and usually the small cap will lead the market on the upside and on the downside. So now that it has consolidated for the, practically for the entire so far this year, right? Spend the first 8 months or so, basically consolidating in this range here. Now, if it breaks out, then here's what I got marked off. And essentially, I just do a range extension. But before we talk about that, let's talk about this double bottom here, this potential double bottom, right? Breakout here, and this right here, this pivot high, somewhere around 2254. So if I do a major move of this double bottom breakout, then the target level on that major move is 2380, and that definitely will put it up to a new all-time high, all-time closing high. Then the other thing is, if we do a range extension just from this consolidation range, this balance area, 100% of that 1x extension, and that will put it up close to 2,500. So those are the two levels to keep an eye on. If it does break out of this consolidation zone and move its way up to the all-time high. Now on the downside is that it failed to break out of this zone and retrace back. Then we basically back to square one here to this bottom of this range. And that would be somewhere around 2,130. And for the Dow Jones Transportation, we've been saying that we need to see this reclaim the 15,000. And as you can see, it is kind of struggling to try to get there. But it's been hovering near that level. So you have to bear in mind that there's still a possibility for this thing to make a surge up and break through this 15,000 and move back up toward this, what turned to be was support now become resistant at 13,346 or 13,350 area. Okay, so but if it reverse back down, then once again we're still looking at this 14,242 as a downside target on the near term for the Dow Jones Transportation. And for the Dow Jones Industrial, I essentially have redrawn this trend line here to connect more of these bottom, pivot level here, the pivot low. And right now it seems like it is also forming a little bit of a wedge. And we have been monitoring this 1x range extension on this 36,438 area. And this trend line here essentially up to 36,000. Right now, the Dow Jones Industrial is showing a little bit of an underperformance comparing to the S&P 500. So I wouldn't be surprised to see the Dow Jones Industrial to come back and possibly test this level somewhere around this 35,150. And if it does come back into this balance area, then I'd be looking for this thing to retrace back down into this level here, somewhere around 33,800. Essentially, we trace back down to the other end of this balance area. So we'll be watching for these level on the upside. Essentially, first is somewhere around this trend line here near the 35,800. And on the downside, watch for this 35,150. And if we break that, we're essentially watching for it to come back into this balance area. Now, earlier we looked at the New York Stock Exchange closing basis. And right now, looking at this price action, you can see that it is coming up on this trend line here that could pose some sort of resistance. So I wouldn't be surprised to see the NYSE come back down, the composite, right, to come back down and possibly test this 16,700 level. So once again, it's critical to see would it be able to stay outside of this zone here, this balance area. If it doesn't and come back in, then we could see a retracement back down to the lower or the bottom of the zone, somewhere around 16,058 area. Okay, so just bear in mind that if it breaks, then that'd be good. We'd be looking at 17,000 and above. And essentially, we also be doing a little bit of a range extension. And let's do this now and see what that range extension is. Just kind of get an approximate level here. All right, so that would be 17,358. That would be a 1x of this range. Now let's take a look at the ETF for the S&P 500, the SPY. As you can see right now, it essentially we have traced out the 2x extension of this balance area or this range extension. So we're going to take that off. And also the other thing is we had this Fibonacci retracement off of this swing here. Right? It came down below the 618, but did not come down to the 50% level, and then bounced back out. So right now we're essentially looking at this 127. It got tagged last week. So now we're going to be monitoring this 457.52 area. This is the 141 extension of this Fibonacci retracement extension. So what I'm going to do is I'm going to take this out because this is no longer in play anymore. So I'm going to remove that, and we're just going to monitor these upside potential target here based on the Fibonacci extension. Now, if it decides to come back down, then again, we're essentially looking at this level here, this 448 area. And this is the value area high of this composite, this range here. So we are looking at this particular value area, right? So it's if it come down here and dip back in, then we essentially are looking for a potential retracement back down to this 436 area. So that's the downside, and the upside is up here. And here's a look on the QQQ, the ETF for the NASDAQ 100. Also, again, we are looking at this range here and the range extension. you can see that it's also have achieved that major move. So right now we are going to remove that, and right now we also looking at these two balance area, and one is up here just recently from last week, this balance area. So if this break out, then we could just do a 1x extension on that. And also the other thing is if it breaks down and let's say come back below this balance area, then we look for this thing to come back in to this balance area. All right, so and this area will be somewhere around 376. And if we do a little bit of a major move here just on this range extension, and we see that it could go up to that 385 level, just a 1x extension if we break out of this balance area. So those are the levels to keep an eye on in the coming week for the QQQ. It's up here at 385, or come down here to the 376 area. Now let's take a look at the 10-year yield. As you can see, it came up a bit again. It's still hovering between this 1.2 and 1.425, and it's sitting at 1.322 as of Friday. All right, so we'll just kind of see it's going to be chopping around and move itself up to this 1.42. And the US dollar kind of pulled back from its recent high here. It got close to this 94 level. Did not come up to tag this 94, and you can see that it's been pulling back since then. Right now it's sitting back right underneath this 92.115 here in this zone that I have. Matter of fact, came down to this 91.8 area. So we're going to keep an eye on to see will it come back down to this 91.24 here area, and possibly retrace back all the way down to this 89. But you never know. We're still looking for this thing to possibly bounce back up to the 94. So this zone is still in play for the US dollar until it dipped down to this 91.24. Then we basically be coming back down to this zone. And as one would expect, crude oil price would kind of get a little bit of a lift with the weakness in the US dollar. So we are seeing it holding near this $70 level, and I wouldn't be surprised to see it work itself back up to somewhere around this 75. But on the downside, we'd be looking at this 64 and 61 area here into this zone. We see silver got a nice bounce on Friday, and it came up to above this 24.7 area. So we'll see, would it be able to get above that and work toward this 2667, or would it just a temporary bounce and come back and retest this 2275, essentially put in a nice strong double bottom before the next move up. And similarly for gold, as you can see, gold is moving above this 1804 level, and it seems like it is making its way up to this 1846. So we keep an eye on this trend line here to see what this trend line pulls some sort of resistance there to get gold to push back down to this 1804. So yes, I missed this trade down here, but I definitely wasn't going to be chasing it up here. So we'll see if it come back down here. I'm going to take a look at it on at these level here to see what the price action tells me, because I'm still basically looking for another retest of this level down here somewhere around this 1700 area. Now, before we take a look at the market profile for the ES, the E-mini S&P 500, just take a look at the volume profile. You see last week it's pretty much in balance here for the week. Although we did peak above this balance area a couple times, it's just kind of hovering in the borderline of this balance area. So next week we're going to see would it continue to move up and break out of this balance area, and see would it be coming back down and retrace this balance area here, okay, this zone here. So we're going to see would it be able to hold above this 4,500 level essentially for next week if it come back down. But if it continue to move up, then we'd be looking to see would it get up to this 4,560 level here. Now, the other thing is looking at the market profile, right? When we look at the market profile, we see that there is a Globex all-time high that was printed on September the 3rd. and that level is 45.4950. So that's why we'd be looking at that 45.50 level. And once it come up and tag, there's a good possibility that we might run up to this 45.60 area. Okay. And also the other thing is we did not see any pull high or anything like that from last Friday's close or last Friday's price action. We did not even see any single print in last Friday session. So if the E-mini S&P 500 fails to come up and tag this Globex's all-time high next week and decide to pull back, then we'd be looking at these full high in a point of control and also the single print. So essentially we'll come down in this area here near the 4,500, and we'll see how the price action will react or will behave once it comes back down to these level. Okay, but if it does break out, because we're looking at this balance area, right? So if it does break out, then we'd be basically looking at the level of 45.50, and that also implies the S&P 500 will print another new all-time high. Okay, so bear that in mind. That's why we are looking at the E-mini S&P 500 to get whatever the market is trying to tell us about the S&P 500 cash index. Finally, let's take a look at the heat map from last Friday on the S&P 500. As you can see, not too much green on this heat map here. Some basically been concentrated in these large cap tech stock once again. And you notice that the financial is weak, and also the consumer stable, material, utility, and energy is weak. Even the healthcare sector is a little weak because we are not seeing that much of a green here in this sector. And also the industrial is weak. And here looking at the heat map for the NASDAQ 100, you can see there's only a selectively few of the semiconductor actually making a little bit of a contribution in pushing the NASDAQ 100 up on Friday. We see NVIDIA up 2%. Also see these semiconductor equipment manufacturer like Applied Material Lam Research, KLA. They are making a little bit of an upside move. But other than that, most of the semiconductor is pretty much down. We got a little bit of upside from Broadcom and also AMD. And the healthcare, we see Moderna got a little bit of a bit there. Right? But other than that, most of the other healthcare is relatively weak on Friday. Now, looking at the heat map for the Russell 2000, what a contrast from a couple of days ago. Right? We see healthcare quite weak, financial is weak, consumer discretionary, real estate, energy, almost the entire map is pretty weak. Right? Just a little spotty green area here in this, they call it information technology sector. We see some of the tech stock is moving up. Majority of them is showing a little bit of a weakness there. Just kind of spotty action, price action on the upside. And that's why we are not seeing much of a movement on the Russell 2000 on Friday. I'd like to finish this video with this monthly chart here. This chart goes back all the way back to the 1930. Just want to highlight the period in which we see 7 months or more consecutive up month. So you can see back in 1935, we saw 12 consecutive up month, and also in 1936, 7 consecutive up month, and back here in 1949 and 1953 and 1958, 11 consecutive up month. And in 1961, 7, and in 1964, 8, and also in 1980, 8 consecutive month. And on 1982, got 9 consecutive up month. And in 1991, 1993, 7 consecutive up month. And also in 1995 and 1996, and also here 2006, 8 consecutive up month. And in 2009, 2013, 7 consecutive up month, and in 2017, 10 consecutive up month, and just recently we saw 7 consecutive up month, and we could possibly see 8 consecutive if September turned out to be another up month. So what this chart tells us is that no, it is not that rare to see 7 consecutive up month, and it's not that we should see a down month because we have already seen 7 consecutive up month. We even have seen in the past, right, 8, 9, 10, 11, and 12 consecutive up month. So just because it went up 7 consecutive up month doesn't mean that the market will come down now. All right. So is there a storm coming in the market? Well, based on the internal, it doesn't say there's a storm coming, but well, I wouldn't be surprised to see some sort of pullback. But a major correction, the internals and the price action are not indicating that. And also looking at the ES, the E-mini S&P 500 with that Globex all-time high, that certainly point to the possibility that we could see another new all-time high from the S&P 500. Now, maybe after that, then the price action will change and might tell us that we should be bearing down for a potential storm or a correction. But right now, that is not in the card. Right now, there seems to be a little bit more bias on the upside than on the downside. If there's any downside, it'd be a pullback, and I'd be surprised to see a 3 to 5% pullback. Right now, in the recent past, we hardly even see a 2% pullback. So until something had changed in the market to alter the participant behavior, going from a complacent to be a little bit more fearful and going from risk on to risk off, we are not going to see a correction anytime soon. So if you like this video and you are not a subscriber or new to this channel, be sure to click on that subscribe and also click on that notification icon so you won't miss any future video from me. And be sure to smash that thumbs up to help me promote and share this video. Thank you for watching. Stay safe and have a great long weekend.